Welcome to Financial Coffee, brought to you by Resource One Credit Union, ignited by the credit union movement and inspired by not wanting to be broke. So come have a sip as we try to come up with just the right blend of financial tidbits to help you achieve your money goals.
Welcome, everybody. This is part 3. Yes, you heard it. This is part 3 of our mini series talking about credit union history. And we're right into it right now. So we're getting some really good conversations. And again, we have Mike here. How are you doing, Mike?
I'm great. How are you today?
I am good. I am sipping on some white chocolate mocha, the little coffee pods that I get. They're so delicious and convenient. And I love them, and they're keeping me nice and hyper today. What are you sipping on today?
So nothing as fancy as white chocolate mocha, just a cup of black coffee here. So.
Oh, yep, that's a good go-to as well. That is acceptable. But welcome to Financial Coffee. So we're here again, like I said, talking about history, the history of the credit union and the credit union movement. And in part 2, we talked about the 20s and getting into the 30s, but we talked about the Great Depression after the Roaring 20s and different things that went on during that time period that helped give credit unions the boom that they have today. And we have a lot of good information. So I'm going to, again, get right into it so that you can learn something, hopefully. But first, I want to talk about our president, not the president today, but the president at the time. So we're getting into the 30s, and President FDR, Franklin D. Roosevelt, our 32nd president, he was a president at that time, served from 33 to 45. He was elected for 4 terms. Now, in the history class when I was in high school, I paid attention for the most part, but I do remember that he was elected for 4 terms. He is the first and last president to serve more than 2 terms. And history about presidents are really interesting to me. What about you, Mike?
Oh yeah, I'm a huge history buff, especially when it comes to kind of the presidential histories and some of the things they do. And FDR is definitely one of our most interesting presidents, not just because he served multiple terms, but he's one of just a handful of presidents that actually died in office, and he just died of natural causes. I believe there's we'll have to fact check this, but I believe only 2 other presidents died of natural causes while in office.
Wow.
Which is what eventually led to Harry Truman taking over. But of course, what he is most known for is obviously his response to the Great Depression and his New Deals, which were kind of set out to stimulate the economy. And so we know plenty of things about stimulating the economy today, obviously with the Great Recession that we went through just a little over a decade ago, as well as the pandemic here recently. But the way that they decided to stimulate the economy was much different. So they had big public works projects as part of the New Deal. They built things like the Hoover Dam. They built hydroelectric dams, roads, bridges, infrastructure. But also one of the best parts about this is that they started the Federal Credit Union Act of 1934. And this is basically what allowed credit unions to form under federal and state charters. If you remember back in the last episode, we talked about there wasn't a lot of legislation in place. It was a very loose affiliation of people that were putting their money together to form these cooperative institutions. Well, now it's actually got the backing of the federal government. And this was obviously a response to tight lending policies from the banks, not a lot of access to credit or savings. And so this was part of the New Deal. That's how credit unions came along. And so it was specifically designed to help people get money flowing and to really stimulate the economy.
Yeah, so it was like they were trusting credit unions to help them do that almost, So that's probably why so many things passed so quickly in that time period. But so we're still in the 30s. We're talking about the 30s and what was happening, during his presidency and things that happened. And I'm just going to throw it out there. In 1936, Resource One. So, of course, we work for Resource One Credit Union here in Dallas, Texas. And when we first started out, we started out as Sears Employees Federal Credit Union, or SEFCU. And this is just one example of how an employee group pooled resources to provide. So everyone worked for Sears. They put their money together to provide fair lending to those who really, really needed it. Did you have anything you want to add about Resource One?
Yeah, I was just going to mention, you mentioned the employees, and you think, oh, all these employees get together. When Sears Employees Federal Credit Union started, it was just 7 employees that were there to pull their money together, and you basically became a member with just $5. So everybody now today at any credit union, you have what's called a par savings, and so you have to keep $25 or $50 depending on the credit union. Here at Resource One is $25 in your savings account. You had to put $5 into a par savings account, and that's what made you a member of Sears Employees Federal Credit Union back then. And so, I just always think that's really cool. It was a very small, humble beginning. And that's how most credit unions started. In fact, Resource One, we got into the game quickly, at least when we were Sears Employees Federal Credit Union. The first federally chartered credit union was actually here in Texas as well. It was Morris Shepherd Federal Credit Union in Texarkana in 1934. So we weren't far behind there. And I'm just always impressed by the very humble beginnings that not just us, but most credit unions have a similar story. A lot of credit unions have a similar story as far as their history. They were started just a handful of people, 60, 70, 80 years ago. And most of us can trace our history and our roots back to them.
Yeah. And one thing I kind of like to bring up too, when it comes to, when people hear credit unions, they think, well, I can't join a credit union because I don't belong to this. I don't belong to that. And back then it was a lot of credit unions because it was for a specific group of people who worked together, but it's not so much like that today. We are not only chartered, we're federally chartered, but we serve communities. So you just have to live in a certain area. And Resource One, we don't serve the whole United States, so we can't have members from all over the world or all over the United States. We're just serving a base membership here, the people that we can serve here. That's one cool thing about credit unions. The credit union down the street, they may serve a different group of people. So there's always somewhere that you can go to be served by a credit union. You don't have to, it's not some secret club. And that's I feel like that's kind of something that people think just offhand, it's some secret club that you have to get into. No, there's no passwords. As long as you belong to that same group where you live, maybe where you work, then you can join that credit union. So I think it's just really important to bring that up, especially for any new time listeners or listeners who don't really know what credit unions are.
Absolutely. And I think we're going to probably talk a little bit more about that in our fourth part of this series. But
jump ahead.
Yeah, at this point, at this point, we are open to a lot more people. Back when credit unions started back in the 1930s, it really was a very small group of people that were affiliated, whether it was through a church or through their employer. And that went on for a long time. It really didn't change and allow credit unions to serve in the community until the 90s. And so that's kind of where some of that misconception comes from, is that you did have to work for a specific place, or you did have to be involved with a specific group. And it always seems that the times that credit unions grow the most are times that our country is facing some of its biggest financial difficulties. The Great Depression's a great example of this. Over the last 15 or so years since the Great Recession, credit unions have also seen a huge influx of new memberships. People have started getting away from banks to join the more consumer-friendly credit union movement. And you'll see that throughout this history that we go through is the credit union movement grows every time the United States economy kind of faces its own downturn, because we're there to step up and help Americans, because we really are about people helping people.
Yeah, and we're still around. We're still here. Sometimes we don't take that much of a hit. Of course, there's things that happen to everybody. It's just, it happens, but we didn't take that much of a hit, because we're pulling our money together. So although we're federally chartered and everything, we're still using our own money to help other people out. So I think that helps. And it also brings me to more interesting things in our history, like World War II. How did World War II, which that was around 1945, how did World War II affect credit unions?
Well, just like I mentioned, every time the United States has kind of needed help, whether it was on an economic front or something like that, credit unions have stepped up. So one of the things that credit unions did during World War II is we sold war bonds. Credit unions as a whole sold somewhere in the neighborhood of about 12 million war bonds. They were valued at over $400 million during that day. That's close to $6 billion in today's money. So for those that don't know what war bonds are, is that back during World War II, World War One, previous wars, we didn't just borrow money. Not to get too political here, we didn't just borrow money to go to war. We actually had to raise that money, and technically they were borrowing money through war bonds. And so you bought a war bond, it earned value for you, and then you were able to sell that war bond at a later date, and it did accrue some value. And so that is one of the things that credit unions really did to help the war efforts. And just like we could kind of talk about in one of our earlier episodes, it was all hands on deck during World War II. Everybody was there to help, and that's how credit unions did their part. Unfortunately, there were some downsides to this because of everybody was really hyper focused on supporting the war effort. Credit unions didn't grow a lot at this time. There was a lot of regulations that kind of prevented credit unions from being able to lend money or take additional deposits, those kind of things. And so you did kind of see some downside to that from a credit union industry standpoint. But that's not what we were here for. We were here to help Americans and to really focus on, helping the war effort as a whole.
Awesome information. I love all the information, but guess what? There's going to be more information. We have one more part to this series that I'm really, really enjoying, because again, I'm learning something. I hope that you're learning something, maybe getting some things ticking in your mind about how the credit union movement has worked and how we're still standing today. And we have to give our props to the things that have happened in our past. So we got one more part coming up. Part 4 of our history lesson, our history, whatever you want to call it. But we hope that you come back and that you can come in and see what else we have to talk about and learn something for yourself. So, of course, thank you for joining, and see you on part 4.
Thank you.
So if you ever have any questions or comments about anything that we've talked about, just like a credit union, we're here to serve you. So let us know what you want to hear. Email us at financialcoffee@r1cu.org. That's the letter R, the number 1, the letter C, the letter U.org.